Okay, good morning, everyone. Welcome once again to Rally Academy. This is the morning market review where we try to make money every day. My name is Victor Bolarin, and I'm going to be your host for today, being the 14th day of May 2025. Well, today is a good day, and at least saw some volatility in the market from yesterday due to a number of factors, but majorly some trade agreement from the US. First of all, we just have a few persons on the phone. Well, because of time, I don't think we'll wait. And the good thing is we are live streaming on YouTube at the same time, so you can also head over to YouTube and watch this video, or you go back to YouTube and rewatch this video again. Okay, you can rewind it, play, pause, and all. So it's good. Good morning, Mr. Felix. Good morning. So how are you doing today? Okay, so I think we don't need to waste time. There's nothing much fundamentally, just all right, that's good. Okay, nothing much fundamentally, just saw that of AUD wage price index, that's 330 AM, and it was good. So AUD should be strong. Now the problem now is how strong and for how long. That is usually the case, because sometimes you might see fundamental comes out and it's good for the currency. Sometimes it might be very good. It might, the strength might increase massively. Sometimes it might just be a little. And aside, okay, it's good. It's strengthened. For how long? These are the major challenges with the fundamentals that we usually have. So but fundamentals are also because they bring volatility to the market. They bring money to the market. People bring money to the market, volume. And you always need money in the market to buy or sell. Just imagine that you have funds, you have the money, but there's no product for you to buy. Or imagine that there are products to be sold, but there's no money to buy them. So we need both buyers and sellers to be active in the market. So fundamentals will bring money to the market to be traded, to be bought, and to be sold. All right. And sometimes it can take away money from the market for those who want to buy to come back again and buy. So it's good actually. This is one of the major upside of fundamentals. It's good, right? So you trade fundamentals or not, we always want fundamentals to come into the market, but you don't want fundamentals to come and do you dirty. You don't want that. So for today, we are mostly technically clean, except for the USD. USD will have been down for a while, but now it's up and it has consistently maintained strength. I think aside from, let's see. Okay. All right. So let's dive into our charts. So I hope everyone can see my screen right now. I hope you can see my screen. Please, if you can see my screen and you can hear me, just let me know by typing a yes. Just type a yes. Okay. Okay. All right. Thank you. Thank you. Thank you. I appreciate it. I appreciate it. All right. Okay. So now last time or last week we were looking at one of the ways to analyze. So, like I always tell you, I'm not just here to try and just say, oh, buying, we're selling. Not really. In fact, that's not really analysis. I'm just dishing out, but it's best when you know how to analyze yourself um, to take decisions because the truth is opportunities come to the market a lot. Like opportunities are just numerous. So which means that what if I am not actively analyzing the market for you like this and the opportunities, that means you won't see them, you won't take them. Okay, so which is not good. So I'd like you to take as many opportunities as you can spot. because the opportunities everywhere. All right, so this is NZD USD for instance. Let me activate. I would like to start with currencies. Okay, so prior to this time, we had upward trend. I think price started going down, up, down, and it looks up. So let's see our market structure to see if price has been broken. Now, I mentioned two things. When price is up, when price is, let me say, meant to be up, let me push it this way. So before we start putting it on the chart, want to see upward push. You want to see, so this is an impulsive move, like a push to the upside, then you'd like to see a correction, which we call retracement, right? There will always be corrections. Now, sometimes the confusion can be this. Sometimes the correction might look very small before price, picks up again and goes higher. And sometimes the correction might just look like this, ranging before price picks higher and keep pushing to the upside. Now, this causes a lot of confusion. In fact, confusion confuses traders a lot. Now, let me tell you, when you see your correction ranging like this, ranging or small range like this, either like this or like this, it's not retracement. It's not. Or if you see it just a little, just small, then price continues pushing higher, it is not retracement. It is not. All right. Now, a good retracement should cover some distance. Good morning, Mr. Victor Ab Abalen Denokin. I'm so sorry, I might not get it right. Good morning, Kalu Jaya. Good morning, everyone. Good morning. Okay, so a good retracement should cover at least 50%, like halfway of that correction. That's a good one. It's solid retracement. It's more like you building something. You're constructing a building, and let's say you want to keep pushing higher. So let's say you want to build another floor top of this one that you built. Imagine casting that floor and not allowing it to dry, not giving it enough time to dry to solidify. You just lay another one on top of it. It's not a good structure. This is not a strong trend. It's not. All right. A strong trend is such that it does some good retracement before continuing. It is solid. That means price is securing its base and getting enough momentum to push higher. And sometimes price can push all the way like this, which means that there's a lot of distance for price to cover. So in this particular scenario now, we need some good retracement. Remember, we need price, half of this move. Now, sometimes it might not go up to half. It doesn't mean it's not a retracement now. All right. Sometimes, but if it does something small and continues, not retracement. If it does range, then continues, not retracement. But if it does something maybe like this, or halfway, or even below half, then continues pushing higher, good. Then it's retracement. So it can push like this, it can do like this, and before you know, it pushes even higher. All right. So price does this movement in so many different ways. So now let's look at the chart and let's analyze how price. So we are seeing, okay, on the 4-hour time frame, price down, up, down. Then let's see if it has broken structure back to the upside. So I'm on my 1-hour time frame. On my 1-hour time frame, I want to mark my major structures, my swing highs and my swing lows. Swing highs, swing lows, swing highs, swing lows. These are your major points in the market. And it's essentially good when you start from the bend. Okay, what do I mean by the bend? Now, notice that prior to this time, price was going up, right? Going up. Then it got to this place, it couldn't continue. So this is the bend. So it means that this was the highest point it got to, right? This was like the highest point price got to. And say this is like a low point. Okay, no, this is like a low point. Good. So price, we are prior to that point, you're expecting some retracement to the upside, which it didn't. Price broke below and came all the way to this downside here. Price came all the way to this downside. This is where the bend now happened. So price retraced back inside, then falls back down. So inside this your internal structure, we are looking out for possible sell opportunities, which price give us a sell opportunity at this point. Okay. Now inside of this my retracement, the highest point so far was this point. It almost gave us a double top. So it almost gave us a double top. So price shifted this way and all the way here. So what we are expecting now is we expect price anywhere inside here to start dropping. Now, this is the high, this is the low. We are currently, price has changed character to the downside because the book structure shifted down a bit, okay? So we are looking out for sell opportunity, all right? We are looking out for sell opportunities, but before we sell, we want price to go higher first, right? We want price to go higher first, which is something like this. Remember, this impulsive move, 50% of it. If price can go 50%, which I think price has done already. So any moment we should expect price to start coming to the downside, right? And in my opinion, I think there's some liquidity down here. What is this point? You know, at this level, if price can push as high as this level, then most likely be in for some good sell. If price can push as high as this level, we'll most likely be in for some good sell opportunity on NZD USD. Okay, so need price push like this, then let's retrace all the way back to the downside. So that's what I'm expecting for NZD USD. Please remember, if you don't get anything, we do advanced classes in Abuja Mondays and Wednesdays. Mondays 2 p.m., Wednesdays 2 p.m. Mondays 2 p.m., Wednesdays 2 p.m. Right. Now that is the constant advanced classes. So sometimes we also bring in some other advanced classes which we let you know through your account manager, or we send you a mail. And now most of you don't check your mail. For instance, we had an event yesterday, but you don't check your mail to get the invite. Some of you don't even check your SMS, you know. So please do well to check your mails to get some invite from us, all right? Okay, so our dearly beloved USD JPY. So as you can see right now, this is my 4-hour time frame. USD JPY has changed direction and it's now to the upside. Okay, so which means we are looking out for buy. Then I come to my 1-hour time frame. I look out for my major market structure. So I always like to start from the bend. The link, we've done that already. It's a physical class. It's a physical class. All right. But you will get a link. You will get a link for another. Just hold on before we are done with this class, right? Oh, sorry, before we are done with this session. Now, what do I mean? For you to start marking your structure, I say start from the bend. The bend is where price change direction. So before this upward movement, I want to see where that downward movement stopped. Good. Notice that it was coming all the way down before now. Now, this was the last point, the last low before price started pushing higher. Are we together? Good. So this is my pen. Hence, I mark here as my low. All right. Mark here as my low. Then I have a high before retracement. Please, I have this high. Please always include your wicks. That's the shadow, the wicks. Right? A high before this retracement here. Okay. Now I think I need to take out this. Excuse me. Let me take out this moving averages. Okay, so price did some retracement, okay, then pushed higher. Now this is not significant, so I won't take it as a new high, right? Came back all the way down, then pushed higher. So I can take this as my new high all the way here. Now this is my new high. The lowest point of retracement was here, so which forms my new low. Okay. Now, if you can do market structure, it makes trading easy. You just keep following the trend. You just keep following the direction of the market. And most times you will have good winning trades. So I expect some good retracement, which price ended up giving me some good retracement here, then turn back to the upside. Now, let me show you a simple technique you can use to then enter your trade. All right. A simple techniques you can use to enter your trade. Mm, please, like I said, I'll check them, but just hold on. All right. A simple technique you can use to enter your trade. So, which is I can add my moving averages. Let's say I have my, let me add my moving averages. Okay, I have my 21. I just like to do two moving averages, 21 and 50. Okay, 21 and 50. Very, very powerful moving average. Like very powerful moving average. Let me change this color to, let's say blue. Right. Okay. And they're exponential. Exponential. Now you can see my high, my low, and my high. We are in an uptrend, which means I'm looking for opportunities to buy. Now, if you have used moving average before, trust me, you'll be using it the very wrong way. This is the right way to use your moving average. So, one moving average usually serves as support and resistance, right? But support resistance, which means they move alongside the price. Is a trending indicator, an indicator we use to trade the trend, but a lot of us do not understand how to trade the trend using the moving average. So you just naturally feel that if it's an uptrend, once moving average is above, I buy, right? So if it hits, I buy again. If it bounces, I buy. What if you buy here? What happens here? Because at some point you see that break. Then you sell, all of a sudden you sell again and it goes up. Then you start buying again, you buy here again, it goes down. It comes up, you buy again, it goes down. You sell, you sell again, it goes up. So it will look like moving average is just not working, but this is how you use your moving average, okay? Which is you use your moving average in line with the trend, in the same direction with the trend. Now, if moving average is once price forms a new high, because right now we have a new high, we have a new. I'm expecting some retracement to the downside, right? So this is my fresh high and my fresh low. I need price to retrace first for me before we keep pushing higher again, right? Which price did here. So what I want is I need the in my retracement, price should go below my moving average here. It should go below the moving average, which it did right here. So hence, once it bounces here, I'm expecting a correction, retracement. I don't buy when I'm expecting a retracement. I don't buy at the bounce. It's dangerous. These are the times where price will just pierce through and go down, right? So I want it to go below my moving average first, even though we are in an uptrend. Now, the moment it goes below, I am waiting for that point where it will now turn and go back up. So this turning and going back up tells me that the retracement is over, because a lot of question is, how do I know when price has stopped retracing and is about to go back up? The truth is you never can tell. You really, really most times cannot tell, except you are adding other confluences, like you're looking for where the nearest liquidity is, where the nearest order block is, or supply and demand, which are a little bit of complicated strategies to trade. Okay, only people who are a bit of advanced sit on their systems or they are checking the market, they'll catch some of these things. But for an average trader, you know, it's easy. When you use this, your moving average, it makes things a lot easier. What do I mean? Just wait for price to go below moving average first in correction. Then wait again for price to turn back above moving average. The moment you have a candle, the moment you have a candle closing, okay, all right, this is very well. All right, so the moment you have a candle closing above, completely closing above your moving averages. Now, not this, but this one. Opening and or closing above your moving average, which is this. Then the next one that opens, you enter your buy. But you need to make sure price closes above. This one did not close above, so you're not buying yet. This one open is above. Well, some persons can just take the trade, but it's safer when you allow it to close above. So the moment the next candle opens, that's the 1 hour time frame or whatever time frame you're using, then you enter your buy. Now, sometimes it can just go straight up, sometimes it can do retracement. Now, one of the beautiful things about moving average, this is where moving average becomes powerful in holding price for you. And this is where you will have bounce, push to the upside. Because price is now aligning with the trend again. All right? Price has gone back up, aligning with the trend again. So this is where the possibility or the probability of price bouncing when it hits moving average becomes very high. Like very high, right? If you spot this opportunity, these are times where my lot size just goes up over the roof. And sometimes I can have multiple positions, all right? Because I've waited for a while. In fact, let me see. So from your high, you waited 1 day, 2 days. It was on the third day, price now broke above moving average to give you your trade entry. So obviously, I want to maximize this now. I really want to maximize because I've waited. You know, they say good things comes to those who wait. So yes, I have a probability of winning the trade. Now, this is where it now gets tricky again. Notice that when you are buying, let me make it lower. This is your, okay, this is your high, this is your low. I've successfully bought. It went up a bit, came back down. My moving average held it. I can add another position. Oh, massively. So usually you target your high. You're in profit already. So after this, price breaks above to give you a new high. The moment price gives you a new high, so this is now our new trading range. New high. Obviously, I'll have a new low because price didn't do a double bottom. So price, this is the retracement, the lowest part. So this is my low. My low just shifted slightly up. That's it. Now, what am I expecting again? When price starts to come down, remember I said price is doing a correction again or a retracement. Hence, you do not buy when price touch the moving average at this time. It is just correcting. You don't. First of all, allow it to go below to do the correction. When price now comes back above, this is when you buy. And this is when moving average will do its job as a bounce. Can you see that? This is where moving average does its job as a bounce. So I presume some other persons would have said, oh, price is coming back to moving average. Let me buy. You buy and you'll be shocked that price is just going below. Now you are buying at the correction after price just created a new high and is trying to retrace a bit before pushing higher. So in that instance, you do not buy at the bounce of a new high retracing back. Allow it to go down, wait for it to go back to the upside. And remember the rule, price has to close above the moving average, right? So this is it. It came all the way down. Now, if you take this buy here, well, it's good. But remember, price, the one that is good should go 50%. If you remember me mentioning that we need price to go 50%. So this move right here, I need price to retrace 50% of it first. Once it does that, then I have more confidence to take the trade. So if I take the trade here, price closed above moving average, which is good. So it means you'll be entering your buy here. Unfortunately, price didn't go at this time. Yes, it didn't go at this time. Let me take this out. So price still came down, probably to hit your stop loss somewhere. Nothing is ever 100%. But trust me, this is more than 70, 80% of the time, you will win your trades. Okay. So price came down. Now, when price pushed higher, the second time, this close high, so I enter my buy from here. Notice now the moving average does its job as a bounce. As a bounce. And one other thing you should take note of is, as at this point where price crossed above moving average, it was premature. Premature because also price, the distance between my two moving averages Very close. So there's some other additional information about this. But notice that this other time the price broke above, the two moving averages were close, and the direction of the moving average here was not looking up, both moving averages. But here it was still looking down when price crossed. Right. So this is one major difference. These are some of the things you look out for. So now price hit again. Let me go back. We have our trade. Okay, so because when we are done, you will be able to determine if you are buying or selling. So we allow price to go below. When it came back above, we place our buy. Obviously, it does its job and we get to our target. Now, at this point, it doesn't create a new high. It just got to the previous high, came back. Hence, we can buy again at the bounce. It didn't create a new high here. It just got to the previous high. So we can buy again at the bounce until it creates a new high like this, right? So we now have a new market structure, which is this is our new high, and this is our new low right here, because this is the lowest point of retracement before pushing higher. Now, remember the rule. Do you buy price? We are expecting a correction now because it recently created a new high right now. So we are in a correction phase or retracement phase. Do you buy at the bounce of the moving average? No. That is why you are seeing price breaking below moving average right here. Well, some risky traders can just take sell. You can take sell, hoping that the retracement will be a significant one. Hence, if they sell, they will make profit. It's fine, right? But if you are trading the direction of the trend, like myself, although sometimes I do it, I can counter the trend if I feel like most likely to go, sometimes. But to be safe, I want to mostly align with the trend, which means I will allow price to do this correction, go below my moving average, at least 50% of this move right here. So anywhere around here, for instance. If price can come at least 50%, then it retraces back up and start going to the upside. I need it to now cross above moving average again. The moment it does, I'm in for a buy. And guess what? Once you wait and you buy, I won't be buying just for one day. Imagine, remember, at this point, the moment you place your buy, it bought for a whole day. One, it retraced the next day, you place your buy, it bought again for a whole day. Like, just imagine, I can be trading this thing for days as long as price is still trying to create a new high and I'm not seeing a retracement yet, right? So this is what I'm expecting for USD JPY. I still expect a further push to the downside, at least here, or it can go slightly below. So you can apply a moving average. The moment price then gets crosses above, we are in for another buy. And this time around, I also expect price to create a new high. Right? Check price to create a new high. So this is what I'm expecting. USD JPY, in fact, for the whole of today, it might look bearish. For the whole of today, it might be down. It might be down. So if you are looking out to trade for today, yes, we are still in that correction phase, which should be pulling to the downside first. And my levels of possible corrections can be, okay, we can have this level, 1. And we can also have this level. Okay, which is also this level. But they are very, very close to each other. So this is like a powerful spot where price can just get to before that reversal, right? Okay, for my usage, what I've seen it do mostly is 1 hour time frame marking the structure. If you go to your lower time frames, price would have broken moving average in any direction. So I strictly use 1 hour time frame to do this. And because I want to take a long-term trade, I want to catch a trend. So I can decide to be a swing trader by allowing the trend to go for as long as it can for days, or I can be a day trader because yes, I can once I see that it's an uptrend and it has done correction and crossed above moving average, I buy. I can buy, I see some significant profit, I close. If it bounces again, I buy again, see some good profit when it's coming out, I close. I can become a day trader. Inside this, I can buy this day. If you buy this day, okay, down, then up again, or you know you want to buy at the bounce, right? If you buy at the bounce, before market close, you now became profitable. You come, you buy at the bounce, you make some profit. All right. So right now we're not buying. If it does this, crosses back above, you can start buying at the bounce until it creates a new high and the correction phase then starts. You hold on again. So that's what we do. So in cases like this now, if I'm not focused on USD JPY, I can go and focus on another instrument, the one that is now aligning back with the trend. No, most times your 1 hour trend will not give you the true direction of the trend. So first, remember, I first of all did my 4 hour time frame. I went to 4 hours first, and my 4 hours showed me clearly that price has changed direction, which is price is now to the upside. Is now to the upside. So that's why I said we are looking out for my opportunities, but I come to my 1 hour time frame to mark my structure. Okay, to mark my structures. That's it. So USJPY for today, I expect price to still be bearish. So for today, I expect price to push down, before it turns above them, we start buying again. Let's see, USD card. Let's do currencies and currencies and currencies. USD card, I think, is in its correction phase. Where's this? So first, I go to my 4 hours to get my trend. All right. So let me even apply my moving averages already. So now this is my 4 hours. Before now, you can clearly see that price was just trying to tend to the downside, 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 not sharp, downside, downside. But now we have a bend. Price is now tending to the upside, right? We recently have a bend now. Price is now tending to the upside. Now, for you to make it simple, just look at, when you zoom out, look at where price is relative to the moving average. Conveniently now, price is now above, okay? It's now above. When price goes above, there's a break of structure. So I am back to my 1 hour time frame where I want to mark my structure. And where do we start marking structure? From the bend. From the bend. Okay? From the bend. You look for where this upward movement started from. Okay, so before you now see that we're down. Good. So this was the lowest point. Let me see. This has been the lowest point. Let me be sure by making sure that price has actually broken structure and is now to the upside. Okay, we had this as a high. Okay, we had this as a low. Then we had this as a high. Let me change this to red. I think red does the job more. Okay. Red does the job more. Makes it so we have this low right here. And from where the this was the previous low. Price took out this low to give us a new low, and before that new low was this high. Okay, good. All right. So now, which means we're on a downtrend, right? This has been on that downtrend. Good, downtrend. So just see how when price gave us a new low and a new high, now notice that the correction phase, price has to go above moving average phase. In the correction phase, do not go against the trend. So price will definitely pierce inside. If you want to keep selling, you'll be in trouble. But when price comes below, yes, your sell can be good, especially if it gets to 50%. This one didn't get to 50%, so see that the distance wasn't much. Now we had a new low right here, and where's that high? And this new high all the way here. So let me adjust again. Okay, now you need to take your time because analysis wins. When you do your due diligence, you have more confidence to take that particular trade. All right. So now we expect a retracement, which did here, then came below moving average. So moving average will do more of protect price, keep it below. You know, it went above first. Remember, above, and it should be at least 50% for us to have good trade. So the moment it came back below, we need to be selling. Now, like I said, sometimes it sells automatically, sometimes it goes back to the test before selling. But even if you enter your sell, no matter how much it goes, it comes back. You know, you are aligning with the market. Gets to this point, gives us a new low, which is at this point, this low right here. And there's the high, a new high right here. So this becomes our new trading range. Okay, now this is where we now had the bet. So we were expecting that price should go below and come back for sale. But unfortunately, it went above our high, which means a change of character, right? We are no longer in a downtrend. There's obviously a change of character right here. We are no longer in a downtrend. We are now in an uptrend. Price has gone above the high. Okay, so we now have a new high at the moment. The ability to spot all of these things will help you. Okay, we have a new high. So what price is doing right now on USD CAD is a correction phase. Now, reason why it was respecting it here all the way because it hasn't gone above the high as such. Now it has created a new zone, broken above the previous high. When a downtrend before, now market has shifted to the upside. So this is now a correction phase to the downside. So once this correction phase can get to midpoint, and it changes direction, we are good. Please, sometimes it doesn't get to midpoint. So somebody will be saying, oh, this is support. Yes, this is support. But if you look at this only as support, you'll be sure that price will break it to the downside. Why? Because price is trying to, do correction. There's a difference if you can tell when price is actively following the trend and when price is going against the trend, doing a correction or retracement. Retracements don't really respect all of these things as such. But in the direction of the trend, price respects the movement most often than not, except if there are fundamentals or any global event, economic global event, political global event that's happening that is affecting price. Just as we have seen in the US trade war with China and the likes of them. Okay. So all things being equal, if we don't have all of those things in place, then price should be following that order. These are the things that can come and cause, a break in that particular order. So price can decide to do this, break that point as support, or even come to this next level here because there's some good liquidity lying around this level. So one of these 2 points, I expect price to come because right now it's already below moving average. So you can respect this one turn or even come here and turn. I would prefer this because this covers at least 50% of this impulsive move already. So once it turns and it goes back above moving average, then we are safe to start buying. All right. So with all of this explanation right now, I think you should be able to trade anything using the moving average. Anything. All right. I just let me see. So right now, remember we can't buy and we don't want to sell right now. So price sometimes can be nice. Okay. Does it work for sell side? Does it still work for sell side? It does. I don't understand, Victor. I don't get a question. By sell side, I don't know what you mean, sir. What of if we plot a trend line on the D1 front or weekly front where it broke the trend line and place our entry for buy on USD JPY? Okay. Is it possible to know the overall trend on 1 hour time frame? Not really. Eddie, no. What is you can't even tell the overall trend from what is use of Fibonacci in this matter? Okay. Carlo, let me start from Carlo. Fibonacci is easy in this matter. Remember, I always mention 50%, right? Okay. So now imagine that price of a commodity Imagine price of a commodity increases from 100 naira all of a sudden and goes to 200. That means there's an increase of 100 naira, right? Good. So at that point, something you were used to buying 100 naira, all of a sudden becomes 200. You'll find out that the number of buyers for that commodity will reduce because it's now expensive, right? Yes, there will still be some people that can't buy it. So the number of buyers will reduce. At that point, it becomes more profitable for sellers to sell. Imagine when your president came and said, sorry, when, they said subsidy is gone, right? The filling stations immediately knew that whenever they want to go and buy again, it's going to be way higher. So what they have now, they started to sell at higher prices. Okay, so sellers will become more in the market. Buyers will reduce drastically. Sellers will now become more than buyers. And in that case now, price will tend to the downside because there are fewer buyers in the market. Now, the moment this happens, price starts to reduce, starts reducing. Now, if it can reduce halfway from 200 to, sorry, the difference in increase is 100 naira, right? So if you can reduce half of that 100 naira, that's by 50 naira. So if you can get back from 100 naira to 200, if you can reduce to 150, well, people feel, okay, I think it's now reasonable. So you find out that the buyer starts to increase. All of a sudden, price pushes higher. So if I'm to use my Fibonacci, I will simply plot my Fib from my swing low to my swing high, wait for price to go below 50% of this move. That's my 50% of Fibonacci. So I'm at 23.6, 38.2, 50. 61.8, 78.6, and 100. 100 means price came back all the way down. And in this case, we call it a double bottom, right? Or comes back to form what we call support. So if price can come 50% or slightly below 50%, then we can look for buy entries to push price back to the upside again, right? The same thing for sell. Sell, you plot your fib from swing high to swing low, allow it to retrace back of 50%, then you sell down again. So that's the use of fib in this particular level. So sell, you can plot trend line. Yes, I can even plot trend lines to see my, what do I call it now? My retracement. So imagine I plot my trend line from here. Yeah. So if trend line comes and possibly hits this point, especially when it coincides with 50%, it becomes a good entry, right? So there are a lot to talk about. There's no time. To be honest with you, there is no time. Let me quickly look at other instruments, especially those ones that have been asked for. GBP, USD, Euro USD, US 100. You can't, but on indices, you even do it on a much higher time frame. With indices, you do it on a much higher time frame. So this is GBP USD right now. Okay, so let me see. My 4-hour time frame. I want to get my directional bias. Okay, we've been up for a while. So let's see if we are still up or market has broken structure. Where do you start from? From the bend. Okay, that was, so this was where price was going down and down and down and down and down. All of a sudden, price changed direction. So this down here is the bend. Sorry, just follow me so that we can be accurate as much as we can, as much as possible. Okay, so instead of price to keep pushing down, this time around price broke higher. Okay, so it first of all pushed to this level right here. Push to this level right here. Then it pushed even further. Let's see. This zone is very wide. Like you can see how wide this zone is. All right. Sometimes TradingView does the job better. Okay. So while it was pushing higher, this level give us this particular low, not a good retracement though. Okay, um, push to this low. So we are still pushing higher. We are still pushing higher, and this one is not significant though. But if we were to take it here, yeah, okay, okay. So it has broken lower. It has broken lower, and when it broke lower, the lowest part of the retracement came all the way down here. So for it to break lower, this is it, and this is it. So I'm expecting price at any moment to turn and start going back to the downside, which is somewhere like this. Remember, anywhere above 50%, right? So we've gone even 50% and even slightly above. So I need price at any point to start tending back to the downside. Any point right here to start tending back to the downside. So we fancy a short position on GBP USD. On Euro USD, so price has broken and it's coming to the downside. Okay, because this is where we were tending to the upside, and we had a bend. Okay, so this was our bend right here. This low that created this new high. Price gave a bend and it now has created a new low, which is here. Let me take this out. A new low, and this higher front. So we are expecting, sorry, back here. Okay, so we are expecting price to give us some retracement before we keep pushing lower. All right, so either you apply your moving average, you draw your fib. So if I draw my fib, for instance, it's going to be like this from swing low to swing high. So I'm expecting price to get anywhere above 50% before we start to turn back to the downside, which is anywhere from 50%. Right? Anywhere from 50% before we can start pushing back to the downside. Right? So this is just this simple strategy that you can apply to your trade and look for good trade entries. You can decide to be a swing trader. You can, even with this, decide to be a day trader, and you can still become a scalper with all of these. With this same one strategy, you can become anything. All right. With this same one strategy, you can become anything. Now, when it comes to gold or indices, generally, you do it on a much higher time frame. Right? You do it on a much higher time frame. Now, have it at the back of your mind that we will fancy more of a buy than sell, because generally prices are to the upside. Let me see. And if you remember last week Wednesday, I told you that I'm expecting some uh, significant retracement for gold, which obviously we've seen. Let me, which we are seeing, because it's still, doing that retracement, which we are seeing right now. So price pushed high, created a new high for us. Now, if we are to do this on a 4-hour time frame, you can mark your structure from a 4-hour time frame. Reason is because of the volatile nature of gold as well as indices. These guys are very, very volatile. Okay, so you want to make sure, okay, okay. So price then pushed sorry, all the way here. This becomes, okay, a retrace. Excuse me. No, price push to this high, retrace here before going to give us a new high. I want it to be significant. Okay, this very massive high. So you can see that we have a massive trading range, like a massive trading range in between. This is a massive impulsive move. All right, so guess what? We are waiting for price to do 50% of this particular move, which I think price has done. Now, in the correction phase, remember, this is my goal now is 4-hour time frame strictly. I'm not switching back to 1 hour at all. I'm not. If I want to look for entries, then I can go back to my lower time frame 1 hour length. But I'm doing this same, marking my structure on the 4 hours for gold, on my 4 hours for gold, right? So I'm expecting price to come 50%, especially when it coincides with an area where we have some form of liquidity, which is around this level. So this one this way, right? So you can see that price is stopping at this level. Now, there are a lot of things involved. Now, price has given us some significant retracement, at least 50%. Hence, the first time it broke above, you can see cleanly just kept pushing higher, right? Then the second time now is back below. And I expect the moment price can push above on my 4-hour time frame. Imagine how long it took. Just see this. See this, for instance, from here, and price broke above. If I go to my 1 hour time frame, see how long it took, see how many days. So it went up massively for 2 days straight. 1, 2, before it came back down again. So imagine if price breaks above again, right? So once it breaks above again, we can push higher even for days. So just wait for that break and we are in business, all right? US 100, I started early so that we finish early, but fortunately, still cannot. Okay, this one is on another league entirely. Okay, this is on another league entirely. I don't want to take out the stops that I put here. So let's see. Okay. Um, all right, so you do this on 4 hours. This is same 4 hours, same 4 hours. Okay, so you'll agree with me that after this upward push, there was a massive bend from this, the highest point. It came lower first, then it did some retracement to this point, pushed further lower. So which is it did retracement to this point and pushed even lower, right? Good. So we were expecting that price push back up, the form comes lower and even lower. But remember I said, these guys have a natural uptrend. So it's stronger to the upside down to the downside. Downside can be very swift and massive, but if it returns, it stays a long time in the upward direction. So hence, we now have a break of structure back to the upside, all right? So I don't think we're expecting any retracement anytime soon. Price has given us a new high, but we are yet to see retracement. It's still pushing high. We are yet to see any retracement. So I don't have a new high yet. It's still actively pushing to the upside, right? So we can't tell when the retracement will start, but once it starts pushing lower, then I can apply my moving average and wait for it to break lower, then turn back to the upside, then I'm in business again. But for now, we are still pushing higher on US 100. So I think this is much we can take for today, this morning. I know you have questions. I know there are lots of questions. And to answer these questions. I also promised, that we're going to do a class, but it has been hard to find a time for that. But I can, just make sacrifice, possibly later in the evening. Maybe, can look at something. So if you're interested, just um, um, send a hi, then I'll drop the link. And, further trainings, just so that you can be actively trading, but trading with the right knowledge, right? Oh, okay. No, if I drop it here, you can see. Like, okay, I mean you drop it from your on WhatsApp. Let me just call my number. Right? So you can just drop me this up. Um, so it's 080-265-82493. Now you can also reach out to your account manager so that you can get latest info. I understand you can be busy also. So um, you might not keep track of some of these things, but we are here to also help you whenever we have some of these trainings, some of these events, so you can participate, you can, join, and let it be of benefit to you. Right? The goal is to make money at the end of the day. Okay, so, okay, yeah, it's 080-265-82493. 080-265-82493. 080-265-82493. Victor. You can as well reach out to your account managers. So when we have some of this training, they send you the link. So just do, I'll send you the link and be good. All right. Thank you very much. I have to go right now. Wishing you a very peaceful day. Thank you.